going to go ahead and get started.
This is Jeopardy!
But for legal reasons, this is not Jeopardy. This is Cin7's Daily Double, and we're so excited to have you here. As I mentioned, this is Jeopardy for manufacturers. What is year-end stock taking? Let me talk you through our hosts for today. First up, we've got Sierra Rogers. She is our ERP and IMS expert. She's got 13 years of tech experience, and she leads product strategy here at Cin7. She tackles every challenge like a Jeopardy champion. She focuses on developing smart solutions that keep manufacturing and inventory management running smoothly and make sure that our customers keep coming back. Secondly, we've got Brittany Brown with us today, the founder and CEO of Ledger Gurus. She's the QuickBooks savvy CPA who turned a two-person dream into a 65-strong powerhouse in just 10 years. She's a pro in e-commerce accounting, leading her team to create 156 plus tutorials for over 17,000 subscribers. So she's got a lot to share with us today. And then finally, myself, my name is Lauren Cassidy, and I will be your clue master today. I'm a part of Cin7's marketing team, and I'm here just to keep the questions coming, keep the competition fierce, and the game as exciting as ever. So the rules of the game, very simple, follow along. The questions and polls are going to populate throughout the game. You'll see them pop up on your screen. Take your best guess. There is no pressure, no stress. Don't be afraid to ask questions throughout the game as well. The Q&A function is at the bottom of your screen. And then just in case we don't get a question answered, please know we will follow up with you following today's game. So before we get started, in the interest of practice, I'm going to go ahead and launch a poll for all of you just to make sure we all understand how this works. All right, it should be up on your screen. This is the best New Year's resolution for businesses in 2025. Invent a barcode scanner that doubles as a karaoke mic. Finally figure out what AI actually does. Buy an office dog, teach it to sniff out missing inventory, or stop labeling mystery boxes.
These are really fun, Lauren. Very creative and funny. Good job.
Miscellaneous
Way to
stuff.
keep it fun.
We'll give you all just another second to answer. There we go. We're getting it. All right, I'm going to end the poll. And by a large portion, a lot of you are ready to finally figure out what AI actually does. And conveniently, we are going to share with you a little bit about what Cin7 is doing with AI today. So let's dive right into it and start with the importance of year-end stock taking. This is our first round. So this percentage of inventory discrepancies occur due to human error during manual stock takes. Or stock counts, excuse me. I'm going to go ahead and launch that poll. You should see it. All right, I'm going to go ahead and end that poll. It looks like the bulk of you selected 72%. Let's see the answer. It's actually 50%. So we're going to dive into Sierra, and she's going to talk us through what stock taking is, and we'll get a little into the meat of this.
Yeah, sure. Thanks, Lauren. So let's start by talking a little bit about what stock take is. Simply put, stock taking is that process where you're going around the warehouse and you're actually counting all of your physical inventory. You might be using a barcode scanner, you might be using a checklist, something like that. But it's all about ensuring that what you think you have in stock matches what you actually have in stock, and then reconciling that in your system of record. In our case, it would be Cin7. The task, it might sound like, oh, it's, so routine. It takes so much time, so many, human hours are spent on this, but it's actually really critical that this is done, and it's done on a regular basis, because that good, accurate stock data is really the foundation for your business operations. One of those phrases that we hear time and time again is good data in and good data out. This is the opportunity to go ahead and get really good data in. And you're checking to make sure that your data has a really good baseline. It keeps you from having discrepancies. It helps you minimize errors, and it really just ensures that everything lines up perfectly in your books, which we'll talk about here in a bit. But really, so today we're talking about manufacturers, and why is this so important for manufacturers? So let's talk about it to start with from an operational perspective. So stock taking can help you identifying slow moving or excess inventory. Sometimes we call it overstock, which I know here at Cin7 we talk about overstock a lot because it can really be detrimental to your business. So doing stock take can identify those items that are just collecting dust, but it can also identify the gaps in your supply chain, or even the inefficiencies in your production planning or your production process. So with our last webinar, we also talked a lot about cash flow and how stock take is a big role in your cash flow. So when you know exactly how much stock you have, you can actually plan productions more efficiently, and you can free up that cash that's tied into product that is just sitting on the shelf, right? And then we can also avoid some of those hurdles we were talking about earlier, like the overstock, the supply chain issues, things like that. So we want to avoid that by having good data in, by doing these regular stock takes or stock counts. And really, it's just a win-win for smoother operations, like I've been talking about, but also for financial health. And this is when I'm going to hand it off to Brittany to talk more about the financial side of things.
And I just had a quick audio glitch. So can you guys hear me okay right now? Okay.
Yes, you sound great.
Holy cow. Nothing creates panic in your heart like suddenly realizing you've gone live and now you have an audio glitch. Okay, good. Glad I switched to my phone and we should be good to go. Okay, so, one of the primary reasons why we do the stock take is because of the financial implications of it. And we care most about the financial implications as we're closing out a year, both because we need to understand how we're performing profitability-wise. We care as managers if we have to be audited. Also, we have to be aware of the fact that we have a higher degree of responsibility to make sure the numbers are right. But then also, inventory has a huge impact on taxes, and all of those things come together simultaneously at year end. So one of the reasons why the stock take discussions happens at year end is because of all the financial implications of this particular process. One of the things that I always find interesting when I talk to clients is they talk about what they call the inventory tax. And I was like, what is this inventory tax of which you speak? And what they mean is that when they calculate their inventory count at the end of the year, and it has a financial impact as it runs through cost of goods sold, it often affects their taxable liability, and that's what they call the tax, the inventory tax. And I was always like, what is this inventory tax of which they speak? That's what they're talking about. Because oftentimes at the end of the year, it's the count of the inventory that has the final effect on how the year is going to look, and what the financial impact of that year is going to be. And so, for most inventory companies, and especially those who are running manufacturing as well, because they have so many moving pieces, inventory is unquestionably the most complex part of their financial picture, but also the most impactful part of their financial picture. Cost of goods sold is usually the largest cost category that businesses experience. And so it's the category that can also have the biggest swings one direction or the other. So one of the things I particularly appreciate about stock takes at year end is the opportunity it gives us to basically repent of our poor choices all year long, right? It's an opportunity to start fresh, to look at everything. A little bit later in the webinar, I'm going to talk about the way that inventory is sort of an operational issue with downstream financial implications. But the stock tank is really a way for us to set everything right. And if we didn't adhere to great principles and practices all throughout the year, it's a way for us to say, okay, where do we really stand? What did the year really look like? And let's go into the new year with a fresh start, with a clean slate and an opportunity to get it all right moving forward, and an ability to set it straight at the end of the year.
Awesome. I think that we've kind of built a really solid foundation for you all to understand the importance of stock taking. Let's go ahead and move into our second round. This is the how. So this cost is most impacted by inaccurate stock records and contract manufacturing. Let me go ahead and launch that poll. Is it A, labor costs, B, cost of goods sold or COGS, overhead costs, or D, equipment depreciation? Excuse me. All right, I think that we probably have gotten most of you in, so I'm gonna go ahead and end the poll. An overwhelming amount of you said it was B, cost of goods sold. Let's see. Crushed it. Cost of goods sold. Again, let's go ahead and dive in. Sierra, I think that you are going to start us in the how, so take it over. You are muted.
I had the opposite problem of Brittany earlier. I am so sorry. I was going to make a joke about how here on LinkedIn recently, I joked about how Santa reached out to me asking me to be a contract manufacturer for gift wrapping, and I would have totally blown his cost of goods sold because I am a much slower gift wrapper than his elves. So yeah, I would have been a poor choice for him. But luckily it went out. It was just fine. Okay, so let's go ahead and dive into how Cin7 makes stock taking easier and more accurate. So first up, I want to talk about real-time inventory management. This feature is really what ensures that your stock levels are constantly being updated across all of your channels, and it's done instantly. So whether it's the raw materials, maybe it's work in progress, you've got finished goods that are coming off the production line, or you just deal with finished goods, as well as all of your different sales channels. So if you're selling on Shopify and Amazon and with Walmart, and you've got a retail environment, just making sure that your inventory counts are all accurate in all of these places in one unified system is it's just crucial to all of this tracking, right? And for manufacturers, like Brittany said earlier, you've got just a different layer of complexity with those raw materials and production orders coming in. But by using this real-time inventory management, we're taking out the guesswork for your tracking of your inventory. You're going to know exactly where it is at all times. And there's also some automated processes in Cin7, such as automatically creating transfer orders, maybe from your warehouse to your shop floor, or maybe you need to transfer product between warehouses, things like that. Just reducing the manual steps, reducing manual adjustments when needed, and it really helps to improve the decision making that you've got to make, which makes your year-end reporting a whole lot easier. So that's the first part. And then the second part is around the stock take module. So this is a module that we designed and built specifically around this inventory count and the process. It's rather flexible and very powerful because, like I was saying earlier, it supports those multiple locations. So you can actually count inventory at your warehouse or multiple warehouses, maybe different production sites, the retail locations, etc. So you can assign, and on top of that, you can assign tasks to your team members, and you can actually track their progress and ensure that the count is actually completed in an accurate way. So I know marketing uses the term game changer quite a bit, but this really is a game changer for managing large scale stock takes, especially if you have those complex operations. Maybe you've got 4 production lines and you're trying to figure out where all your inventory is at different times. This can be a game changer for that. But let me go ahead and hand things off to Brittany. She's going to talk to us a little bit more about the reporting side of things.
Well, and let's just compare the automation of Cin7 with the alternative, guys, which is that you're trying to do all this in spreadsheets. So like as an accountant, I do believe in the religion of spreadsheets. I am advocate all the way, but like trying to track inventory processes in a spreadsheet is just not a very good experience. It's just a really, really rough experience. One of the things I particularly like about Cin7 stock taking functionality is the fact that you can, first of all, I like the fact that you can segment your warehouse and you can do the cycle counting, because if you just try to launch into your whole warehouse simultaneously, it can be really, really overwhelming. And honestly, if you have a really big warehouse that needs to be counted and you are a manufacturing company, which means not only are you counting a finished good, but you also have the whole raw material and work in process you have to work through as well. Like that is a very overwhelming, large job. So like if it becomes logistically difficult for you to do a stock take in its entirety at year end, like I recommend you consider utilizing the functionality of the cycle counting instead. And one of the things we recommend to our clients is as long as you make it through your entire warehouse at least once a year, like that, you're going from an audit perspective, like that is considered good practices. And so like if you want to just break up one of the things we tell our clients is whether you're doing it monthly, whether you're doing it quarterly, like just segment out your warehouse and say like this segment's going to get counted quarter one, this segment's going to get counted quarter two. It just makes it a lot more doable. So as you're going through the cycle count, one of the great things is you basically say like, this is the area of the warehouse we're going to count, and please provide me a report that shows me, hey, Cin7, what do you think we have on hand? And then Cin7 will say, this is what we have on hand, and you count it and you say, well, actually, this is what was really on hand, and it'll automatically make that adjustment. The alternative to what I just said is you have to figure out what you have on hand. You have to then figure out what you thought you had on hand. You then have to figure out what that adjustment should be. But the way that Cin7 automates that is they make it very, very easy for that process to then turn into an accounting adjustment that makes life really easy. You don't have to really know and have your head wrapped around like all the parts and pieces of like what's the value that we have currently in this, and what's the quantity, and what's the discrepancy, and how's that, and which direction should I post that, and is that going to be an increase to COGS and a decrease to, like all you have to do is say, this is what I actually had on hand, and Cin7's process does everything else. So like when we talk about processes, I mentioned that so much of inventory is an operational problem, but it becomes an accounting problem because everything that happens from an operational perspective around inventory has a downstream effect that affects accounting. And oftentimes it's not even like necessarily the warehouse manager who's seeing the operational problems, because as long as he can find his inventory and he can stick it in a box and he has the quantity in general that he thinks he had on hand, if everything is kind of falling apart downstream, it's usually the accountants that are seeing, wow, this picture is not accurate. Nothing is looking correct. These numbers don't make sense to me. If you find yourself in this position as an accountant where you just kind of want to cry because it's just not making sense, it all just does not make sense, there are a couple things I really recommend you do. Number one, do a stock take. Fix your system. How do you clean up a system? It's two pieces, quantity and value. Get the quantity right, make sure your inventory values are correct. And if they haven't been correct because your purchasing process was not really dialed in and was not really allowing for that, just decide what a correct, reasonable value is based on like per SKU, based on, your most recent purchasing, whatever, like fix the inventory values and then move forward. Like this is the most beautiful part about the stock take is the redo, like the reset option that it gives. And like it's just and the Cin7 automated process just makes that whole thing much easier than it would otherwise be.
Yeah, and I love the idea of that reset, especially this time of year. We're thinking New Year's resolutions. We're thinking like, how do we improve business processes and
Right.
things for this year? So I think like, even if we misstep, even if our numbers are off, it's okay. Like
Right.
we just got to accept it and correct it and then move forward. And then I do want to also mention Foresight AI is a great tool within Cin7 that you can use. It's an add-on, but it helps with forecasting. So if you have the good data in, it will actually tell you these are the products that are collecting dust. Don't buy any more of those until you sell some. Or these are the products that are trending. Like you should be buying more of these, or buy them faster because your supplier is taking so long to get them to you. Like it is actually, that is the AI that Lauren was talking about at the intro. That is one of our powerful tools to help you make informed decisions, intelligent decisions that are just going to help benefit you and your business and reaching your goals. So highly suggest those as tools to lean on. Now, some other benefits for manufacturers around stock take and kind of setting this time aside for all of this. Like we said, it saves you time by automating the manual processes. Both Brittany and I have kind of touched on that. But why is that such a benefit? It's because it's freeing you and your team up to do other value-added tasks. So you're not sitting there, with the red string trying to figure out, is it a debit, credit, who does it go, where does it go, all of that. It frees you up to do other more important tasks, and it has that better data in for those better data out, the better decision makings. It can also lead, not having accurate stock take can actually lead to costly mistakes in your financial reportings or operations, which can land you in a circumstance where you're getting audited, which can be a headache in and of itself. So really just this best practice, can't stress how important and how beneficial it is for you and your business. But as you grow, as you start doing these processes and you're making more informed decisions, as your business grows, Cin7 is there to scale with you. So whether you're adding a new warehouse, I know of one of our customers who's doubling the number of their production lines within the next year. We also have customers who are expanding globally. No matter what your goals are, we're here to grow alongside of you and your business. And it's not just about managing the inventory. We talk a lot about manufacturing as well. If you're doing B2B or D2C or a little bit of both of sales, you're doing sales across multiple channels, whatever your business goals are, whatever your business model is, we're here to help you operate faster and smarter and more efficiently. All right, Lauren, do you want to take us to the last section here?
I would love to, Sierra. Thank you for that tee up. All right, we are on our third round. It's accounting and implementation. This is the most common reason manufacturers fail to secure financing for growth. Let me go ahead and launch that. Go ahead and take a second. All right, I'm going to go ahead and end that poll. It's funny to read this question. Really, any of these answers could fit as a reason manufacturers fail to secure financing growth, but all of you felt very confident, and understandably so, that it's a lack of accurate inventory data, and that's right. So let's dive into it. Brittany, I think you're leading us through this section.
Yeah, so one of the things that I wanted to just touch on was the risks of not doing good inventory accounting. And obviously one of them is financing, and the reason for that is because companies are taking a risk on you when they lend you money, and they want to know where you stand financially. And for one thing, if you don't have your crap together around inventory, it doesn't reflect well in your business. But another big reason why is because oftentimes when people are getting ready to look for financing or to sell their business or to bring in investors or whatever sort of activity they might be doing that requires them to then get serious about their accounting, that's oftentimes when they do get serious about their accounting, which often means getting serious about understanding inventory, and then all of the mistakes of their past catch up to them if they're basically waiting until that moment to deal with it. So we actually saw this it firsthand with one of our clients a couple of years ago when the buying market for e-commerce was really, really hot. We had a client who was looking to sell their business and been in business for about 20 years. And during those entire 20 years, they had not done a stock take ever. So highly 0 out of 0 do not recommend that approach, because what happened was they were looking to sell their business. I think it was about a $40 million a year business. That stock take, the first one they ever did, actually required a $2 million adjustment down on inventory value, which, by the way, translates into a $2 million increase in what should have been recorded in cost of goods sold over the past several years. And when you're talking about multiples now on revenue as being the purchase price, basically for evaluation, that $2 million adjustment to them in inventory, which basically ended up getting captured during that period of time, translated into several $1 million in valuation blown, because, and honestly, that $2 million probably represented 20 years worth of mistakes that were all compounding into that current year. And had they been doing incremental stock takes, I mean, one of the things you just need to understand, guys, is that stock takes will result in it will result in, what's the word? Adjustments. Sorry, my brain was just like, what's that word? It will result in adjustments. Like the proverbial sock in the dryer approach is 100% true of inventory. I put 2 socks into the dryer, only one came out. I don't know why. I can't tell you why. I don't know where inventory like wanders off to with its friends and disappears in the warehouse, or like how a new box that suddenly was like missing for years suddenly shows up. But this is just reality. If you think it's not reality, give yourself a break and just understand, inventory perfection is virtually impossible. And so when you count, you are going to have adjustments. And so $2 million represented 20 years of adjustments that hadn't been taken incrementally each year. And had they been doing those stock takes each year, they incrementally would have been recognizing that revenue. And instead of that cost being hit at a critical time when they were trying to show their business as profitable as possible, it literally cost them millions, guys, not 2 million, because it was a multiple on revenue. It was a multiple on EBITDA was what the valuation was. It cost them millions in their buy price to have waited so long to do that inventory adjustment. So that's just one risk involved. But in general, like every single thing you do from an inventory perspective, like I said, and I'll keep saying, has a downstream effect on accounting. One of the best things about doing a stock take is it helps you understand just how many gaps you really have in your system that are then affecting downstream inventory impact. So when you do the stock take at year end, it helps you see, okay, how well are we doing? How well are we operating? The larger that adjustment, the worse your operations are. The larger that adjustment, the more you're missing all the things that are happening day in and day out. So for example, if you have a huge adjustment, so let's say you have a 20% adjustment, that usually indicates that there are a lot of things happening in your daily flow of business that are not being captured in real time accurately within your inventory tool. Whether that's that, returns are not being processed correctly, or we have people stealing from us constantly and we don't know that, or whether we're having to throw things away all the time and we don't know that, or whether inventory is moving back and forth between this warehouse and that warehouse and we don't have good visibility into that, or whether it's something as simple but as aggravating as the way you're handling prepaids around inventory. Like every single one of these themes, if they're not, they have a cumulative compounding effect into your overall financial picture. And so when you do a stock take, it's an opportunity for you to see where are the gaps and what's happening and how significantly are those gaps affecting me right now. And just so you guys know, that's one of the best ways to kind of zero in on improving your inventory functions is to do a stock take and say, wow, this adjustment was way larger than it should have been. Let's dial in our processes. And doing the stock take more often helps you begin to dial in those processes. And you can say, why, where did it go? What did we miss? What process is keeping us from having the visibility into this? And the more you dial that in, the smaller your adjustments will be, the more confidence you'll have around your accounting picture. And then when it is time to sell your business or get funding or find an investor or bring in financing or do any of these other things, like you've got it together, right? And it's obvious to the people that you're getting ready to sell that you have it together. And just so you know, confidence in the numbers creates a premium. So the more insecure they feel about your business and the more insecure they feel about the risk that they're the risk that they're taking, The higher their perceived risk, the greater your cost of financing and the less interested they'll be in your business and the lower your valuation if what you're trying to do is sell. Most of that lack of visibility comes around inventory. And so the more that you can dial this in, the better your processes are, the more confidence they have, the lower your cost of financing, the better valuation you'll get on businesses. So like in summation, basically, as an accountant who lives and breathes and dies inventory all day long, because our firm focuses on e-commerce businesses that have an inventory focus in everything they do. Like, let me tell you from experience that the stock take is the best way to clear the slate, start anew, fix the systems, and check yourself over and over again. How are we doing? Give yourself a grade. How are we doing? How are we doing? How big was our adjustment as a percentage of our overall inventory? Like, was it better than it was last quarter? What did we miss? What did we miss? What did we miss? And as you dial that in and you get better and better and better, this process that currently feels very overwhelming will become something that you do better and better and better. But you just need to know perfection is never going to be the goal, and it will never be the name of the game, and it will never be even really possible without an astronomical amount of time investment. So using tools like Cin7 make it a lot easier. They streamline it. They create functionality and maturity for your organization if done well and implemented well and supported effectively, meaning once you make the investment, you need to stay committed to the investment in an inventory tool, but all other pieces begin to fall in place when you engage in the inventory maturity journey. Yeah.
That was really well said, Brittany. And I think what you're really identifying is that, like, and I think a lot of you on this call will relate. Stock taking feels really overwhelming and intimidating, but what I'm getting is that the more you do it, the easier it becomes and the less intimidating it will become. And that's value for your business. We do have one more question that we're going to throw at you just to wrap things up.
Yeah.
Is our daily double. Don't get too excited, but here we go. Businesses around the world collectively lose this much money every year due to stockouts, overstocks, and inventory mistakes. Let's go ahead and launch that and give you a second. Oh, my music's not working. I'm so sorry, guys. Leave it till the end of the whole game for the music to stop. There it goes. Woo! All right, I'm going to go ahead and end the poll. Again, businesses around the world collectively lose how much money due to stock takes or stockouts, overstocks, and inventory mistakes? That's $1.8 trillion. If we've talked through anything today, I hope it's that you understand the importance and the necessity that is stock taking, and that Cin7 is here, Ledger Gurus is here to help you automate your process, take a little bit of the terror away from stock take and make it more doable. So thank you all so much for hopping on with us today. I did see a couple questions come in. Please, Adam and Candace, know that we see them and we will follow up with you. Just so all of you know, we will share Ledger Guru's information in a follow-up email, but if you're interested in finding out more about them, you can also visit their website right now. And we will follow up with you at the end of this, and we will be sharing out a recording. So thank you all so much. Have a great rest of your day and a Happy New Year.
Thanks, everyone.